Hello and welcome to Ladies Talking Business, the program where we not only break business down to simplest terms, but try to make it a little less boring. I'm Ididi Onyiwang.
And I'm Irene Ubani. Today we will be talking about investments. How does one invest on a low income, different forms of investment, and other related issues?
Well, we have with us an investment expert to make sense of it all. Tomie Balogun, thank you for coming on the program.
Thank you for having me.
So let's talk investment now. What is investment? Like, what are the basics of investment?
Okay, so I always say that in very simple terms, investment is really putting your money to work, basically. So a lot of us as millennials or young people, we work so hard. We get up early, go to work, put in a lot of time and effort to get promotion at work. You're working so hard, but when the salary comes in, you just spend it or you just leave it in a savings account. So investing is a way of putting your money to work so that eventually your money will outwork you, and then you can actually earn a lot more from your investment than your salary, than your job. Yeah, that's in very simple terms.
Okay.
We know that this is your forte, right? And recently you concluded a university tour where you talked a lot about investments.
Yeah.
What are the different types of investments that we have?
Lots. So I usually categorize them as short-term based investments or long-term based investments. You can also categorize them based on risk and based on so many other factors, but in very simple terms, short-term and long-term. So short-term investments would be investments that you can invest in and earn in less than a year. So 365-day period. So you have Treasury Bills, you have commercial papers, you have fixed deposits. Long-term, I would categorize stock market, real estate, private investment notes. You have multiple small businesses, lots of investment options. So I will categorize it in very simple terms, short-term, long-term.
And now, what are the differences between the short-term and the long-term investment?
So short-term investing basically means that you can invest and get your money back within a 12-month period or 365-day period or less. So for instance, if I wanted to say Treasury Bills, you have 90-day Treasury Bills or 91-day Treasury Bills. So that means you can invest and get your money back in 91 days, basically 3 months, right? You also have 182-day Treasury Bills. You have 365-day Treasury Bills as well. And then you also have the commercial deposits, which are usually 30 days sometimes. And then, so short-term investments, which is, if you need your money in less than 1 year, consider short-term investments. So when you're thinking about long-term investments, that means your money is going to be tied down for a longer period of time. Mm-hmm. All right. So the stock market, for instance, unless if you're a trader that wants to get in and get out, most likely you're going to invest and then wait for a couple of years to either earn dividend or sell. Right? Mm-hmm. So then real estate as well. You hardly get into real estate and can get your money back in less than 1 year. That's an example. If you also invest in a small business, I mean, the small business needs to grow and get back money before you can say, I want my money back. Mm-hmm. If you think about examples like those in Silicon Valley, those that invested in Apple had to wait 20 years or more before they actually did an IPO. So long term, 2 to 5 years, 10 years, 20 years, different ranges, right? But short-term, long-term, very simple terms.
What are the return on investments for short-term and long-term, and are they affected by macroeconomic issues?
Absolutely. So yes, you earn a lot more on long-term investments, right? Short-term, I always say that, one of the things I always say is investing is not a product, right? Because a lot of people get carried away with, what do I put my money in? Do I put my money in Treasury Bills? No, investing is a plan. And I always use this analogy. I say that if I wanted to go to Abuja, and let's say both of us wanted to go to Abuja, for instance, our destination is Abuja, right? So you might decide to take a flight, right? That would take you 45 minutes, 1 hour. I might decide to take a night bus and get there in 6 hours or 7 hours. Now, those are two different vehicles that will get us both to the destination, right? So let's say my destination is financial freedom. Now, you might decide to take a different vehicle. I might decide to take a different vehicle, but our destination is
financial.
Exactly.
Yeah.
So if you decide that you want to invest in Treasury Bills because it's safe, risk-free, conservative, that's fine. If I decide that I want to invest in small businesses, real estate, that's my choice.
Maybe you should explain what Treasury Bills are.
I will get into that. I just wanted to say this very important point, that it's not a product, it's a plan. Once you know what your plan is, you know the kind of product you should invest in. So for instance, if you are risk averse, you shouldn't get into a small business investment, for instance, because you could go south and you could lose all your money, right? So if you're someone who's conservative, then stick with the slow and steady investment option, which is the Treasury Bills or bonds or anything. So investing is not a product, it's a plan, right? So let's get into each one. Short term, Treasury Bills. Treasury Bills are basically safe securities that are issued by the government. So the government says, I need money and I want you to lend me money. So I take money from you and I give it to you back with a return. Now, the government is not going to go bankrupt. Worst case, they'll print more money, right?
I know.
So that's like the safest investment option ever for any country, right? Treasury
So are they
bills.
opening like an initial public offering for the public?
Yeah, so they don't do that,
does it work?
right? So they do auctions. They do it through the
Okay.
CBN. It's the companies that do the IPOs, initial public offering on the stock market, stock exchange. So the CBN comes out and auctions a couple of bills to raise money, and then you go and bid. Right now, banks bid on our behalf because they raised the minimum. And then you go and bid and then you can buy, right? So the good thing is, if you want to invest ₦1 million in treasury bills, for instance, it's discounted upfront. What that means is you actually invest 900,000 naira. So immediately you've earned 100,000. Because when they pay you back, they'll pay you back 100,000.
Okay.
They'll pay you back 1 million.
Okay.
Should I take that again? So I want to invest 1 million, right? And let's say the interest rate is 10%. The government will take 900,000 naira from me. So I've immediately earned the 100,000 naira. And then they will pay me back 1 million. So in total, I've earned 1.1
1.1 million.
Yeah, so that's how treasury bills work.
Okay.
Also, it's a secure
It's secure.
investment. of
Absolutely
course.
safe, secure. But you need to note that in America, for instance, treasury bills are 0.02% because it's safe, right? But because exactly, so it's usually ridiculous when you talk about it in America or the UK. They're like treasury bills,
treasury
absolutely not. But because we're in an emerging country, which is why context is very important. Because we're in an emerging country like Nigeria, that has federal debts and they always need money, the rates are high. And they actually drop sometimes. I was telling someone that treasury bills were probably 6% about 10 years ago. Sometimes it's 7%. Last year it was 18 to 25%. This
Now
year
it's about 11 to 13%.
yeah, and this year is about 11 to 13%. So it's something that would always, change and range because it's safe, right? It just depends on what's happening in the economy.
Okay, so like with all that said on investments, people wonder, how do I save on low income? For example, if I earn 30,000 naira, I have responsibilities.
I know.
How am I
It can
supposed
be
to?
very ridiculous.
Yes, so how am I
I know.
supposed to invest with 30,000 naira a
And
month?
then experts like you keep telling us, you need to save, you need to invest.
know.
And it's just
know.
30,000 naira.
How would I do that?
How do we do that? Please?
when for one, I always share my story, right? So it's not like I always had all of this all sorted out from the very beginning. I always tell my story that I worked for about 5 years without doing anything about saving or investing myself, right? So I know exactly how it feels because I probably did 1 or 2 random investments in the stock market at that time because my boss probably forced me to do it. It wasn't like I was keen. No, honestly, my boss says there's an IPO. You come here, come and put your money. I'm like, I need to buy shoes. But anyway,
You always need to buy shoes.
yeah, you always need to buy shoes and you always want to look good at that stage in your life. So I think it was about the time I was going to do my MBA and it was going to be a 2-year full-time MBA. I was like, whoa, girl, you're broke, very broke. Thankfully I was married and my husband subsidized me, but that's not the story. The point is, you can, right? So this is how it starts. You need to know how your money works, right? And this is a lot of people know how much they earn, but they don't know how much they spend. If I asked you, how much did you spend last week? I'm sure you don't know. Do you? So that's always the case. We know how much inflow comes in, but in terms of outflow, we don't track them, right? That's why you say, where did all the money go? Like I had 30,000 last week. Where did all the money go? Now I'm broke. It's because you're not tracking. And this is why budgeting is very important. What I always say is plan your money. Budgeting is making a plan for your money. Like we do career plans, we do life plans. You should also have a money plan, right? So just say that I have 30,000 naira. Yes, I'm not even going to get into the fact that it might not be enough. Let's start with saying, what do you spend money on?
Okay.
So what are the categories of spend? How much do you spend on feeding? How much do you spend on transportation? What are the categories of spend? Define an amount of money for each one. Then see if you can squeeze 2,000 naira. If you can make investment a bill. Because honestly, you can start investing with 2,000 naira. Yes, you can invest in a mutual fund.
But the return on investment with 2,000.
No, the point is to start.
Okay, that's the truth. Okay.
The point is to start and build it up over time. Now, don't think that you have to wait until you have 100,000 naira, 1 million naira to start investing. I think that's the mistake a lot of people make as well.
Yes.
So the important thing is make investment a bill. If it's 2,000 naira you can afford or squeeze out, start in a mutual fund. Do that for a couple of months. Once it gets to 100,000 naira, you have more options, right? But start. 2,000 naira really adds up. Over 10, 20 years, it could become almost $1 million.
Okay, so if you're talking about that now, can you tell us what we can... what would you recommend apart from mutual funds? Like, what else can someone put in 2,000 naira?
Yes.
Not so many, unfortunately. No, and this is why mutual funds were created. Mutual funds, I mean, it's kind of like a form of investment club, which is what I do. It's just to enable a lot of people pool funds together. So if 100,000 people put 2,000 naira, that becomes like almost 2 million, almost 2 billion, right? And then the company invests on their behalf. It is really, I mean, it works all over the world. Mutual funds, exchange-traded funds. It's just a way to get more people investing with at lower price points, right? So I don't think there are a lot of other options apart from mutual funds, to be honest. Prior to April, this year, was it this year or last year, you could invest with 10,000 naira in Treasury Bills, but right now you need 50 million naira. So, and that was because the federal government wanted the people to do the savings bond. But you can still invest in the bank with it as minimum as 100,000 naira with Treasury Bills.
Okay, we know that the rate for mutual funds has dropped to an extent. Can you just talk about this? Because, I mean, I do not want to invest when I know that, or I do not want to invest on a platform that I know that the return on investment is not what I'm expecting.
Yeah. So the thing about mutual funds is you have different types of mutual funds. So one of the things that I always tell people is even if you're going to sign up for a mutual fund, you should ask them what they're investing in. So you have money market mutual funds, and then you have stock market mutual funds. You also have mutual funds that do like a balance. They do the stock market, they do the money market, they do a mix of things, right? So most people usually have the money market mutual fund, the equities or stock market, but they would mean the same thing, mutual fund. And they might have a balanced fund, but they do like a mix. And even if they're doing a mix...
something around the exchange-traded funds?
Exchange-traded funds are different. They trade in the stock market indices. That's very different. So, and that is core stock market. Mutual funds can be money market. The money market is where you find the Treasury Bills and short-term securities by the government. So there's the money market and the stock market, right? So the money market is the government, short-term security, corporate organizations kind of thing. So mutual funds can trade the money market. They might also trade the stock market. Then some of them might find the balance and say we'll do 50% money market and we'll do 50% stock market. It's a risk thing, right? The money market is safe. The stock market is risky and aggressive. I mean, last year we had the recession and stock market just crashed. So all of the mutual funds trading in the stock market will have returned a negative return, right? So if you still want to stay safe, stick with a money market mutual fund or do a balance. You're young. You don't have to. You should take some risk, right?
I mean, your risk you should take some risk,
right? Right. Wait until you're 70 before you stay safe. That's what I always say, anyway. Yeah.
Okay. So we've been speaking on investing on low income. Now, how does one? You've talked about budgeting and all of that.
Yeah.
What is the difference between investment and saving?
Okay, so saving is you just stacking up money, and chances are you're losing the value of your money due to inflation, right? And it's really not earning you anything. Investing is putting that money to work to earn you a return, right? So let's say you even put your money in a savings account in Nigeria and they give you a 4% interest rate. Inflation rate is 11%, so you're at negative growth.
Exactly, because I was going to talk about that.
Yeah, you're at negative growth. So let's say you even put your money in Treasury Bills or invest in a mutual fund and they give you a 12% return. Give or take, plus or minus 1, or you're at par, right? So it still works because when the Treasury bill goes up to 18%, it still balances out, right? So saving is you just stacking up money. A lot of people just keep their money in savings account. And it's also very easy to...
And the value of the money is most likely to depreciate.
Yeah. Things keep getting expensive in the market, right? And then you're most likely to spend it anyway if you have access to it, right? So put your money to work.
We know that you recently published an investment club book.
Yeah.
We have it here already.
Oh, yes.
Tell us, how does it work?
So this is also my story. Excuse me. So right after my MBA, I knew that I needed to catch up with time. Basically, I felt I'd lost time. And then I had this classmates of mine that thought, you know what, why don't you start something together? And let's all just pull our funds together and see how we would have more money, invest in bigger opportunities, we would share the risk and also share the rewards, right? So that's 4 key things.
Very, very intelligent.
Yeah. And actually we didn't even call it an investment club then. We just knew that we wanted to come together to do something. And we also knew that it wasn't the typical ajo or a susu that most people do. So we started out, first job after my MBA, first salary, 50,000 naira each, 5 of us. It was tough because, you just started earning money.
That was 250,000.
Yeah. and you just have to move out 50,000 in May. But we're very focused and committed on getting things, doing things differently from prior to the MBA. And over time, it has been really interesting. I think that is really when my investment journey started, because I've learned so much. Yes, we've made mistakes, we've lost money, but you will also lose money sometimes if you take risk. But it has taught me so much about investing in multiple investment options. Like I've done the stock market, the money market, small businesses, name it, Forex, I've done everything. And now when I sit down and talk to people, I'm not just teaching you theoretical knowledge. I'm telling you exactly what I've done.
What you've done.
Right.
But I have a question there. Regarding there's this small box thing that we used to, I used
Piggy
to have
bank.
the word piggy bank.
Oh, colo.
Yeah, in my time, I used to call it cola. I was trying to be a little fresh, not calling it cola.
Yeah.
So, what is your take on this? Because when I was in primary school, right, I had that.
Yeah.
But do you know my brother was always taking everything I said?
Oh, wow.
Did you know? Growth comes with wisdom.
I know.
I would save all of it. There was no interest on it, but then I felt good about it. Is it also a good way of saving as well? And
I think it's good for children, right? Okay. It does teach you the saving. I also had one on my, and we always looked forward to breaking it open and seeing how much you had stashed up. I think that was the most exciting thing, right? But still, that's the risk you stand. Somebody can break it up. I really try as much as possible to do a lot of ATM transactions, but there are sometimes you just go somewhere that you want cash, or the POS is not working,
or they don't even have POS.
Yes, and it gets very annoying. So you really need cash sometimes. But when you have all of that random 100 naira, 200 naira, 500 naira, it might be a good way to just stash it up somewhere. You always get excited when you find 500 naira in your pocket that you left, right?
Comes up, you can always just
so yes, but the risk is someone can break it open and steal it. So even if you're going to do something like that, it should be for a short-term period. 6 months, 1 year, break it open and put it somewhere, right? That's what I always say. And thankfully, people are getting more creative, building more security-conscious boxes. But I really think they're good for children. My daughter actually had one, and she was so excited when we opened it up to see how much we saved up. And then I started teaching her 10% goes into investing. And she was like, what's investing? I'm like, don't worry, we'll get started.
Right. Start from somewhere.
Start from somewhere.
Okay, please, can you just talk more about the investment club? Like, how does it, if Irene and I say, okay, we want to start an investment club, what do we do? But you know what? That will be after this break. When we return, Tomie will be teaching us how to start an investment club. Don't go away.
Stay with us.
Well, thank you for staying with us. Tomie, you were about to explain how the investment club works.
Right. So like I said, an investment club is basically a group of people coming together. I would say at least 3 or 5, coming together to say that, individually, they cannot invest in the kind of opportunities they want to invest in. So why don't we all come together, put our money together and invest together? So they have a lot more money to invest. They can invest in bigger opportunities, right? And they can also share the risk. So it's not just one person taking all of the risk. And also when the reward comes, because investment always comes with reward, you can share the reward as well. So that's the way an investment club works. And that's how we started. But in my book, this book, I get into a lot more detail where I break down that there are different models of investment clubs. And this is one of the reasons why I wrote this book, because when we started off, I did my research and I found out that the typical model of investment club is what you find in the West, America. They only invest in the stock market. But in a country like Nigeria, where we're an emerging country, right? So many investment options. You should be able to invest in them even as members of the investment club. In the US, you're not allowed to invest in small businesses, for instance, unless you're a sophisticated investor. A sophisticated investor is someone that has at least $250,000 to invest, right? Thankfully, we have an unregulated market, so we can invest in a lot more options here, and then the returns are also higher. So that's the thing. So for instance, when we started investing in small businesses, right? We thought we wanted to enable their growth. But it's a very risky option, and we did lose money in some cases. And it has taught me a lot as well about how to invest in a small business. We invested in the stock market, and when there was a recession, we lost 70% of our value, of the value of our stock. But guess what? It has bounced back now. So that's the thing. It has taught us that if you're going into markets like that, you have to have a long-term thinking, right? You're not going into it because you want to make the quick buck. What if a recession happens?
Quick money making, it doesn't work with the stock market.
Oh no, some people do it. When we had the bubble, but the bubble will always burst. That's the thing. So even if you're getting into some certain stock, the thing is, there are different types of stock, right? Investing is really broad, but I'll try to break it down. So there's dividend-paying stock and there's penny stock. there's small and medium stock by small and medium companies, and then there's the stock from the large caps, right? Large companies with huge capitalizations, right? So if you're trading penny stock is a company that has value of maybe like 50 million, so 100 million. You will find out that their stock, it will just be people trading it. It's not based on any real value. So when you say a stock go from 2 naira to 3 naira, I'm wondering, why is the stock going up? It's because somebody is trading it. It's not necessarily because there's value, because the stock should actually increase in value based on the organizations. What are they doing differently?
Demand
are they innovating
supply,
differently? Or did they just return a crazy profit? There's sometimes that when the bank brings out a report,
their financial reports,
the stock goes up.
Yes.
So there's no basis. For instance, Skybank, like you heard recently that Skybank was shut down. The stock was going crazy at the beginning of the year.
Now it's at 77 kobo.
Yes.
It's about the only financial institution
in
Nigeria right
and a
now
lot of people rushed into it because it was, trading up and trending up, and they had not released statements for about a year or two.
2 years. The last time they released their statement was in 2015.
So there was really no value pushing that stock. So I always say, speak to a stockbroker and tell them exactly what you want. Right, so that's our story. We started getting into different things, but I could do it because it wasn't just me. I had a group of people that were taking the risk together. We could bounce off ideas, we could learn from each other. But when we did make those mistakes, we knew it was time to go and learn how to invest. So we would go sit down with experts, and we learned so much, right? And eventually, I started to blog about it. People started to ask me questions, and then I thought, you know what? I should write a book about it. I did a couple of workshops as well, and then I wrote a book about it, and that's what led to this book.
Okay, so very quickly, what would, off the top of your head and from experience, what are the 5 top platforms you would advise someone to invest in without necessarily mentioning, any names, but what are the top 5 platforms someone can put their money in?
Okay, so this is just platforms. It's not based on risk or anything. So what I always say is, I was telling someone that recently I started focusing on income-producing assets, which is investment options that actually help me earn income, right? Because, for instance, some people just invest in real estate and you have land for 5 years. It's not giving you any money. Then what's the point? I think I'm at a stage of my life where I wanted to start earning income from my investments. So I'll give you 5 examples of income-producing investment options.
Okay.
The first one will be the stock market, which is the traditional. But what I would say is invest in dividend-paying stock, right?
Very important.
There are stocks that pay dividend. There are stocks that you just hold for years, and then finally when something comes in, it trickles, right? For instance, I have an aunt who lives in the US, but every time she gets her dividend from a particular stock, that's what she uses to buy her ticket to come to Nigeria every year. Yeah, so that's what she uses. So dividend-paying stock will earn dividend, earns you income. And then it's 2 sides. You can earn dividend, and then if the stock appreciates as well, the value of your stock also appreciates.
Yeah.
So that's the thing about the stock market. You earn on both sides, capital appreciation or dividend. Yeah. Then another interesting trend that I find in Nigeria now is crowdfunding platforms. You find that they became very popular in more developed countries, but they came in here, and it's actually working in some particular sectors like agriculture. The concept of crowdfunding is there are so many people that there are people that need this money, and then there are people that have this money, right? So a crowdfunding platform is enabling interactions between 2 parties, an investor and someone who needs the money. Now, you as an investor, you say, I have this money sitting down in the bank account, but I don't want to take the risk myself. What if there was a platform that would take all of that risk into, whatever, and then ensure that they can just give me back my money and I don't have to get into farming or all of those things, right? So crowdfunding platforms have emerged in agriculture in Nigeria, and they're really doing good. They give you returns of like 20 to 35% at the highest, and sometimes in 6 months, right? Okay. So crowdfunding, and then there's peer-to-peer lending as well, platforms. I find them very interesting because it's also like a platform enabling interactions, but in this case, they're not focused on a particular sector like agriculture. What they are doing is they're giving people the opportunity to borrow money. So for instance, the bank will probably give you money because you don't have collateral or something, and you just need that money for 3 months, for 6 months, and then, and then you're a risky person. So this is what I mean. I mean, the banks will not give you the money because your credit profile or something doesn't suit the kind of person they'll give the money to. So you have peer-to-peer lending platform where you can come in and you'd borrow money. So I would be, as an investor, I'll be the lender, right? I would give the platform money. They will do all of the checks, ensure that you will pay back. then they'll give me back my money with returns. So in this case, I'm just giving the platform my money as well. And I've done that. I've invested in a PSP lending platform in Nigeria. 10% in 3 months, not annualized. If you know what that means, because when you hear Treasury Bills and it's already 10%, it's 10% over 12 months. So if you invest for 3 months, what you're getting is 10% divided by 12 months times 3. But with this PHP lending platform, I'm getting 10% in 3 months, not annualized. Same thing with crowdfunding. So that's the first one was stock market. Second one was crowdfunding. Third is PHP lending. The fourth one, I would say real estate. Right, so for instance, let's take an area like Yaba. There are a lot of old houses there, right? What if we take an old house, break it down, rebuild like 6 3-bedroom apartments and sell them for 30 million each? That's a project. But I don't have to get into it. I just give them my money and give back my money. So very risky as well, right?
Of course.
Right, which is why I'm like, I don't want to categorize them based on risk, but I'll just categorize them based on investment options you can get your money from. And you can get as much as 50 or 100% on some of those projects, right? That's the fourth one. The fifth one will be small business, right? So a lot of small businesses need working capital. The banks will lend to them and all of that. So what if you could provide working capital to them? So in this case, it will be debt, not equity. Because equity is quite long term, right? You have to wait until another investor comes to, give you back your money. But if you give a small business debt so that they can grow their business and pay you back, it's also a way to earn income, right? I've done that as well. An interesting portfolio that I have is with schools, right? Very interesting as well. So 5 options.
So can any and everyone go into the investment club, and would it work for everybody?
So like I said, there are different models of investment clubs. If I want to say that quickly, there's a traditional model, which is what I and my friends started. The traditional model can be tough. It's tough when money is a sensitive issue. Even with, I can imagine with friends.
Very
and then so even with us that we had been together for an MBA 2 years, there's still a lot of times I'm like, you know what, I'm out of here, I'm done. Like, what is all this? But you tell yourself that, okay, Tomie, you need to stay committed, don't get emotional. And we've been doing it for 5 years, right? And there are a lot of other clubs that have started and they've had their members exit because life happens, something they didn't plan for happened, and you're like, okay, I can't continue. So it can be tough, but one of the reasons I wrote this book is to know exactly what you're getting into from the very beginning so that you know exactly what to expect. And you don't just have these unnecessary expectations, and then when those expectations don't come through, you say, oh, I need to get out, right? So that's one model. The second model is what I call the community model. In this model, we're just coming together as a community to share opportunities, keep ourselves accountable as a group, set goals, and just, learn from each other's experiences, right? So I started something like that. It's called the Green Investment Club. We have 260 members across 8 countries right now. So the idea is, I've invested in this. I'll share it with you. This is my experience. This is the risk I took. This is what happened. Did I lose money? Did I gain money? So before you put in your money as well. And then we share a lot of things with each other. So that's the way it works. The third model is what I call project-focused model. So for instance, one of the investment clubs I manage, a group of 40 young women came together and said, we only want real estate, nothing else. We want to invest in real estate. So 40 of them came together, and as I speak, they paid for 60 plots of land on the Lekki axis as well. So the truth is, individually, they will probably not have been able to invest themselves. Yes. But as a group, an investment club is really just taking advantage of the power of many. So as a group, not only did they have access to more money, they were also able to negotiate for a good price. If I tell you specifically, I would say that the cost of a plot of land was 3.5. But because they went as a group, they got it for 2.4, right? Now, that's what you can do with an investment club.
Okay, interesting.
Okay, so
kindly explain one investment term to
like
us.
20 seconds.
All right, I would say equity because I find that a lot of people misinterpret equity. So if I buy stock on the stock market, that's also equity. So it's a publicly traded company. So let's say I own stock in GT Bank, for instance. That means that I am an equity investor. I'm a shareholder in that company. So if I invest in a small business as well, I own equity in that small business because I am part of that. I'm a shareholder in that small business. The only difference is that it's not publicly traded on the stock exchange, right? So then there's another interesting way that equity is used, especially if you find it used in other countries. When I want to buy a house, for instance, and I take a mortgage, right? So let's say I put down 60% of the amount of money required to buy that house, and then the bank, puts in the remaining 40%. I own 60% equity on my house, right? So it doesn't necessarily mean that I own the house 100%. That's why if anything happens, the bank can foreclose and take my house back, right? Yeah. So you find that equity can be used in different terms, as ownership of a house or an asset, and also as ownership in a business.
Thank you so much, Tomie, for joining us on the program today.
Thank you so much for having me.
Well, that's it on the program for today. Thank you for watching. I am Irene Ubani.
And I'm Edidio Ngwang. See you next time. Bye.
Bye.